All right, welcome back, guys. This is Trade with Ola, and we're going to be looking at a very good trade recap for today. The major reason why I am actually making this video is because I believe it's a very good example to show you guys out there, and it's a lot of mistakes beginners make. I had a friend of mine who made that mistake today, and I want to share the experience with every one of us here. So it's just going to be a very, very short video. Okay. So let's do analysis on BTC because this particular experience was actually gotten from BTC trades today. All right. So let's go straight to it. Now, first things first, obviously, I always come down to the weekly time frame to mark out essential key levels. Okay. So I mark out key levels that actually give me the direction or the trend of the market for me at that point in time. So what do you see me do? So first things first is I always use Malaysian SNR for my marking out of my key levels. Now, there's a reason why price reacted from here. There's also a reason why price reacted from here. There's also a reason why price reacted from here. There are reasons why price react from where they react from. Okay, price does not just do anything at random. No. Okay, it has a specific reasons or points as which it would tend to react from, and it has a validation for that. That's why I always tell a lot of beginners that the chart is never wrong. You are the one who is wrong. You are the one who made that mistake. All right, so let's just go straight to it. So first things first is what do we see here? So initially, I can see that I have what a QM here. This QM was like a validation of where price was reacting from. So we had a QM level here. So for the QM level, I'm just going to pick point to this point here, just here. Okay, so this QM was where I saw this reaction from. Now, you could also scale to the daily if you're not seeing proper key levels from here. Okay, so but I'm working with this key level because it's still valid for me, and you can see that on the chart. So this is the QM, and then there's a way I usually draw my key levels by just using a square box, and I focus on the open and close of my candle, and then I just drag straight to the wick because price can easily move down to that wick. So within this wick zone is where price can actually tend to react from. Okay, so that's how I mark my key level. So we can also mark. We also have this QM here. Okay, but price hasn't gotten there. So we have this QM here where price is currently reacting from. Now I want us to take note of something. So price pushed up here from this point here, pushed up back to where this A-shaped key level. So price reacted off this A-shaped key level, as we can see here. So we have what weekly rejecting weekly at this point in time here. Mind you, I am on the weekly time frame, so I have this weekly key level here that price reacted from. So this A-shaped key level is where price reacted from. I hope we understand what I'm doing here. We're just marking key levels right now using Malaysia lesser now. All right, so if you look at this here, we have an A-shaped key level, and you can see I was able to pick that zone. I always pick from the open close of the bodies down to the wick. Okay, down to the wick. I always like to pick the first candle wick, but since this doesn't have much wick, I always pick the second one since I don't have a wick on this first candle, so I can take it down to this point here, and I'm expecting price to react from this whole zone here. Okay, and that's what price did. So you can see that last week created what's weekly, what's rejecting weekly. Okay, so let's now scale down to our 4 hours. Do we have a breakout? Okay, so you can see how those zones now look on your chart. They now look like support and resistance because that's what they are. Okay, so and then we have a lot of people that you look at them and they tell you, oh, they can remodify their zones. Yes, you can. I have a lot of people that do that just to make it clean. You can see somebody use this 4 hour what A-shaped key level here as their remodification of their zones. So you can do that just to give you a broader space of how price reacted from. Okay, so you can see people do something like this. So you see a lot of people do something like this. Okay, and which is very valid, very okay. Okay, so they've just taken a zone from the weekly and then they've refined it on their 4 hours or their daily time frame. Okay, for we use the 4 hours for refinement. Okay, and now what do you notice here? What you would notice here is I had what my week, I had my 4 hour what breakouts here. So price actually confirmed this bearish move to the downside on the 4 hours. So this was my breakout here. Okay, so that was my breakout or your perfect market structure shift. Okay, this was the breakout that confirmed that this market is now what in a bearish trend. And what do you notice? Price has been making a series of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and our price is making what lower highs right now. Okay, so how do we trade this concept? Okay, so I gave example on how to trade this concept using drawn liquidity, and it tells you where you should be on. It gives you a proper directional bias. So right now, our drawn liquidity right now, which is our directional bias, is price is now moving from what? Price has taken out this external range liquidity. Let me show you how price took out liquidity here. How did the liquidity movement move? How did price move from one point of liquidity to another point of liquidity? It's very simple. So you can see that price broke out of here, pushed back a little bit, and then came back down here, right? So at this point here, this break of structure is price taking out what? External range liquidity. Okay, so you see me do something like UL, and then price pulls backwards to an internal range liquidity. So I want to use the square box also, mark the what A-shaped key level there. So this is my internal range liquidity. I hope you can see that carefully. So there we go. So this A-shaped key level, price pulled back into this A-shaped key level after taking external range. And where's the next drawn liquidity? Price will start to pull back to what? External range liquidity, which is to take out this low here. Okay, so price is just literally doing what? Creating higher highs and higher lows. That's the same concept. And after price takes out external range liquidity, I want us to take note of something. What will actually fuel a pullback or a reversal, okay, or price to pull back into internal range liquidity is something called what? The roadblock. It's something called what? The roadblock. So we have this roadblock here. Even if this V-shaped key level is not fresh, it's still a very valid roadblock. Okay, so we can still use it unless it has been tapped multiple times, probably more than 3 times, then high chance it would disrespect it. Okay, but once it gives you a reversal concept from there, you can actually take it. So this is a roadblock here. Price used this roadblock to make what? This pushback to what? Our internal range liquidity, which can be what? Either this A-shaped key level or any of the OCL levels here, but I'll prefer to use the A-shaped key level here. Okay, so I can mark out this zone. You see that price came back to this particular A-shaped key level or this particular OCL level here. Anyone you want to use, but I can still work with this one here. Sorry, no, this is not what I need. All right, so I work with this fresh A-shaped key level. All right, so price got back there, gave us a reversal concept and went back down. You can still work with this one because that's mitigated once. Okay, so you can still work with this one here. I decide to use this, and then you can see price tapped on it and then drop back down. So people can decide to use OCL. So if you use the OCL here, you have to take the O zone. So this O zone here is your OCL. So that's just it, guys. So this OCL is like a valid zone too. Now, after that again, what do you notice? Price takes out what? External range. Now, after price has moved back to internal range, gives you a reversal concept and start to take out what? External range liquidity. Okay, so if you look at this here, if you look at this carefully, guys, you can see that this one here, what made this price move here to this upside here? Okay, you can see that we didn't have any visible key levels apart from this OCLs layer here to actually give us a reason why price pulls from here. So I won't have even reasons to take any trade setup from here at this point in time. I always want to see that there's a key level that price is reacting from. Okay, trade what you see, guys. Now, what do we now see here? Beautiful one, which has been giving us buys. If you know my last analysis, I told you guys BTC is going to buy to this level here. And guess what? BTC is currently buying to that level. I'll show you guys the trade we took a loss on, the trade we took wins on currently, and the trade we're currently on right now on BTC. So I'm going to tell you why I took a loss on the first one, which I'll explain vividly for every one of us to understand. And then I'll now tell you guys what a friend of mine did, where he took like 2 losses, where we took just 1 loss, and then we had 1 win currently running right now, a trade currently running right now. I'm not going to call it a winning trade right now until it takes our full profits. Okay, so but we have what? This roadblock here. This is my roadblock here. So let me adjust that. So I can use now, if you notice something, after this V-shaped key level is not fresh, but I have an OCL. So I can use the OCL zone. Okay, I can use the OCL zone, and then you see me mark something like this. So if you want me to teach you guys how to mark key levels like this using Malaysian SNR, I'll make a video for that. All right, so now after that, we've seen price take out external range liquidity. Next one is we're looking for price to pull back into what? Internal range liquidity. Beautiful. So, and then the internal range liquidity we have here is basically our other block zone. So I'm going to mark this other block zone here. That's what I'm looking at for price to come back to. Okay, I don't have any valid A-shaped key level there right now that is fresh. So I'm just going to work with this one, another block that is very fresh. So I'm going to work with this. And then there's a V-shaped key level here that is also fresh, which I've marked in line with this other block. So this is the zone I'm looking out for price to come to. Okay, before we now see what another distribution to the downside to take out what the external range liquidity. So I don't usually mark out the external range liquidity until it has been taken out. Okay, I don't usually mark this out like this until it has been taken out. Okay, so once I say reversal concept, then you now see me mark this, that this is where I am targeting. I'll continue to sell until I get to this point here. Now let's now get straight to why we took our first loss and why a beginner friend of mine, he explained it to me. And I was like, that's actually true. Because I experienced such a thing while I was still starting up my trading journey. I experienced such a thing where I have this directional bias paralysis. Let's not give it a big word, okay? You want to literally trade on all directions. Whereas if you focus on just one particular direction, you will be profitable. You will catch a good risk to reward ratio. Focus on the direction you are seeing that is intended, like you've seen it, that this is the direction that is going to move in. Then also look at the charts movement. If it gives you a reversal, also take it. And if you take the loss, it's valid because you saw a reaction. That's why I have this motto of trade what you see, guys. Trade what you see. Now, what did we see here? We saw that, okay, on Saturday and Sunday, I gave you guys an analysis of this buy, and price got to this external range liquidity. I was waiting for what reversal concept. What do? We scale down either to 30 minutes time frame or 15 minutes time frame, right? Good. Now, when we scaled down to 30 minutes time frame, you can see that I had what break of structures. Now, even in the 15 minutes time frame, I always verify the break of structures I am talking about. So I had multiple break of structures. I had this break of structure here. This was the break of structure here. We had this major break of structure here. We had this other one here. I had this break of structure here, right? I was showing you guys multiple break of structure and which one you should use. And then we had what? This other one here. Now, a valid break of structure is the aggressive one that took out multiple candles. This one's just took out one level. See this structure that broke here? It took out only this level. It necessarily did not take out this one. Do you understand? It didn't close above this. This candle did not close above this week here. So this consolidation, then another aggressive move. So this one now just took out only one zone. Okay, so and then you can see that even if it took a small zone here, price has come back to tap that zone and use it to move. But these were the valid ones we had here. Okay, so what did I look out for? I gave this analysis. I said after these multiple break of structures, I look out for the first break of structure. Okay, and I wait to see what do I see here. I can see break of structure. This is my inducement here, right? This is the inducement. Let me indicate that. Okay, so this is my inducement here. And then where's the closest point of interest to my entry? So I can take this to be my entry here. Okay, this A-shaped key level or a V-shaped key level. You can either use the V-shaped key level or the A-shaped key level. I prefer to use the A-shaped key level, which is automatically my breaker block. Why didn't I use this one? Why didn't I use this one? Because they are all valid. I used this one because this was the first break of structure. This was the first break of structure. Okay, so high chances price might likely come to the first break of structure that happened and reacts from there. And that was how we saw this first buy. Okay, so now we've confirmed what our market structure shift, because this was a clear what market structure shift. So we had our MSS here, we had a validation of this MSS here, price taking out the previous A-shaped key level before price tapped our what zone. So this is our MSS here. So we confirmed the MSS, which gave us a first validation trade to take out this level here. Now after that, you notice that price came back again to retest your level. You don't need to panic. Wait for price to test this level and see if it will either react on that level or break out of it. So when I saw this price retesting this level, people were saying, oh, this your buy is no longer valid, it's no longer valid. Price is going to continue to sell because that's the direction. Yes, you might be right, but we have to wait and then react. You have to wait and react. It's as simple as that, guys. There's no two ways about it. So what do I see? I saw that price got to this zone here, reacted immediately up that zone. And what do you see here? You can see that this was what a break of structure. Now, I would want to see a sweep of liquidity and then multiple break of structures, right? But this one only has one single break of structure, but had a sweep of liquidity, swept this low before breaking this structure. So I could easily also take this trade. Okay, I can easily also take this trade, right? But you now notice something. After this break of structure, for me, there was no inducement. That was why you see me, I did not validate what this trade setup. I was not interested. Okay, so I was not interested. So when I saw the price moving back up, and I knew that okay, yes, price can come back to my what draw on liquidity, which is this zone here. Now, apart from that, I needed to see something. I needed to show you guys something interesting, which started making mistake for us, gave me my first loss, gave my other friends their first loss also. Now, what did they see? We also saw this key level here. We cannot neglect it. You can't neglect this. This is a key level. This is a breaker block zone here. Even though this breaker block has been mitigated, right? We still have this A-shaped key level here that can use that can be used to react, but there's a breaker block here. Now, the only thing was I was not 100% valid on this breaker block. Why? Because it has been mitigated. Price broke and then tapped it before pushing. If that price did not mitigate this, high chances that this breaker block was going to hold. I hope we get that. And then we need to remember that price has taken out what has taken out this drawn liquidity here and is pushing back towards internal. That's taking external. So it's pushing back to internal. So the fresh one, the fresh zone that likely price might react from is what this other block. But we also have to wait and see how price reacts from here, right? Beautiful. And that was what gave birth to my first trade, which I took a loss on. So let's look at it. So I waited for price to get to that zone. Are you seeing that, guys? I waited for price to get to that zone. Now, this is where we made our mistake, or this is where I made my mistake. Now, what did I see here? I saw a sweep of liquidity. I saw what? A break of structure. You can see multiple break of structures. You can use your line chart if you're confused. Price broke structure here, price broke structure here, price broke structure here. Multiple break of structures, right? But I will only focus on the first break of structure because that's where I need to focus on. And what did I see? I saw that price broke that structure there, gave me my inducement. This is my inducement here. Price gave me my inducement. Okay, so price gave me my inducement here. And then what happened? Then price came back to what? My breaker block here. You can see this breaker block zone here, right? So what did I do here? So I took my entry from the breaker block zone. How? So I can use my line, tap here. That will be my entry zone. So let me indicate this inducement and entry zone. Entry, so that we'll know the difference. So price, I took my trade here. I gave this setup here. Price got there, gave some few reactions. So my stop loss would have been around here, this high here. The price got there, gave some few reactions, and then stopped me out. Clean, stopped me out clean. Okay, stopped me out clean. Now, the moment I saw this, that I was stopped out, and then what did I see? Price came back, wicked this zone. This zone was still holding. Price came back, wicked this zone. Immediately, I told every one of us to what? Hold on. I told everybody to what? Hold on. That what? I need to see price what? Take out this either this low or break this zone here before I can continue on this what? Buy to what? This other zone here. But my friend continued. He saw this reaction again. He decided that, oh, let me go in. This was a break of structure, inducement, and then I can use this closest POI here, which is this one here. Price reacted off that POI a little bit and then stopped him out. Price reacted off from there and what stopped him out. Are we seeing that? So then what did I now see that now gave me the confidence to go on my own buy? So after that, I waited and then you can see that immediately, immediately I saw a candle breaking out of that zone. I knew that this zone was no longer valid. Immediately I knew that. You can see how we waited. This was already around 4:30 already. And my friend had already taken his second loss. Why? Because he was not patient. He was trying to fight the directional bias. Immediately I waited to see how price reacts off this zone. Immediately price broke out of this zone. What did I do? I waited and I understood that I needed to figure out what my SLP concept here. So what did I do? I could not see the structural liquidity POI here that much. So I saw the break of structure. This was a break of structure here. We had this inducement here, single candle inducement, then became multiple candle inducement. This was the trigger. Now what did I do? I needed to see this POI properly. So I scaled down to what? I scaled down to my 5 minutes time frame. And then you can see that price broke this structure here, gave this inducement, which I can use as this point here also. Give this inducement here. Don't mind me if I'm putting my inducement here, guys. Don't get confused. And where's the first break of structure? This is a break of structure. This is the first break of structure here. So this is one I'm focusing on. And I wait for price to come back to what? My zone, which is what? The order block zone here. So I waited for price to come back to this order block zone here and trigger me in. Okay, so that was what I waited for. So you see me do something like this for my entry. Sorry, let me do this as inducement and my entry. All right, so I waited for price to come back to that zone for me to take my trade. Okay, now immediately I saw that this was my second trade for today. So I took a buy from here. My stop loss was around this zone here, or this one here. Okay, and I was targeting what? I was targeting what? To take out this high here. So I was targeting to get to this zone here, which was a 1:5, right? So immediately I saw that this was my first entry. I called this out, and then price tapped us in and started moving. Then and it's currently moving. I still saw another entry again. How did I see another entry again? So you can see here clearly we had what? A sweep of liquidity. Let me show you guys. This was what? A sweep of liquidity. Yeah, this low was swept. Price broke structure one, broke another structure here, right? And then you can use this other block zone. That's the next entry that you tap you in, and then you tend to want to see price move up. So you can see yourself taking another entry from here. Okay. And then your inducement around here. Okay. So, but I am currently on this trade right here now to see if I can cover for the loss I took here. Okay. So, and then you can see yourself taking another entry here, stops below the zone here. Okay, so for me, this entry here, I won't have been looking too much on it. I just placed a very low amount of money here. I risked a very low amount of money here. Okay, so but this is my main trade. This 1:5 is what I'm looking out for. And you can see that I got all this trade on the lower time frame, like 5 minutes time frame. Okay, but one thing I want us to understand is, can you see how powerful the concept of your directional bias is? The fact that the fact that my friend did not wait for price to react from a specific zone and just guessed, because of the first reaction he saw that failed, that, oh, we need to continue to what? Sell, because it's the overall trend. No, yes, we know that it's the overall trend, but the directional bias is very important. So guys, always wait and react to price. Wait and react to price. It's very important, guys. Okay, so that was how we took this trade for today. So you can see how we started the whole story, and how our direction was just supposed to be solemnly focused on what? Looking for buys till we get to what? The key zone, this zone here that we're looking out for. We focus on buys till we get to this key zone here that we're looking out for, before we can now focus on what? Sells. Okay, so you can see since on what? Monday, we've been looking for buy opportunities. Tuesday presented is buy opportunities. Tomorrow is Wednesday, and let's see if we have maybe market structure shifts, then we might see that entry on Wednesday down to Thursday for the sell continuation to take out this drawn liquidity. So at this point in time, you don't see me coming every day to know what my trend is. No, I already know my trend is a downtrend. So the sell side is always stronger. That's why you see that the sell side produces more aggressive candles than what the buy side, because the overall trend is what? A bearish trend right now. So we're in a bearish trend, but we know our directional bias based off draw on liquidity. So that's just it, guys. I hope this video has been so helpful. Please, please, and please, and please, always make sure you wait for price to give you proper reaction of specific zones before you start to take your trades. Okay, thank you so much. Have a wonderful day. Please keep on clicking on the subscribe buttons. Keep on liking the videos if they've been helpful towards your learning process and all. Thank you guys so much.